Hello everyone, my name is John Paul, DayTradeToWin.com. I want to discuss in this video the profit targets, the stops, the trade management, what goes into using the Trade Scalper software and then managing the trades. Before we begin, remember that trading is risky. Please do not trade with funds you cannot afford to lose. Talk to your broker and also understand the risks involved with any type of trading, Forex, futures, stocks, options. So there's a signal here at 33.19.75 at about 10:15. This happened earlier in the day. I was not able to enter short on this trade, but there is a signal here that just appeared long at 33.21.50. I want to enter not in a rushed manner, but I want to enter knowing that there's a specific entry. You don't have to chase this market. Enter at 33.21.50 or better if you can get a better price, and then manage the trade with a stop and a target. Some of the emails I've been receiving have been, how do you manage the trade when scalping? You're looking at the targets, you're looking at the stops. NinjaTrader has a built-in automated function called the ATM strategy. And so once you're filled, you have to
Order
manually
submitted.
place the order like I did here.
Order filled.
And once you're filled, you see the targets and the stops being placed on the chart and with your broker automatically. Now, this is a good thing. This is important because it frees you up and it's also a way not to make mistakes. If I know that every trade has a 4-tick target or every trade has a specific stop, a 4-tick stop or a 6-tick stop, then I can predetermine that. And when once I get filled, the orders are placed for me. And I can still move these around. These aren't set in stone. If I want to increase the target, if I want to trail a stop, what I wouldn't do though is I would not move my stop further out so I'm losing more money. I would not do that. I would keep the stop. If you get stopped out, if it's a losing trade, take the stop, but don't move your stops. Okay, guys? And so what I want to do is have a target in the stop that's proportionate. Okay, so I'm not risking, and I don't want to risk 4 or 5 points and make just a few ticks. It has to make sense. There has to be some type of risk to reward ratio that's proportionate. So if you're looking at, for
Target
example,
filled.
a 4-tick target that I just made on this one trade and fairly quickly, I would say, what I want to do is have a stop that is not more than 2 times that value, because as the market is moving up and down, it could very easily take you out and stop you out. So I'm not suggesting that you have this huge stop loss. What I want you to do though is not have a stop that is so tight, and so many traders make this mistake. They put a stop that is so tight and so close to where they entered, they automatically just get knocked out of the trade unnecessarily, and then the market moves in their favor. So consider having a target and a stop that's relevant to how the market is moving. So that's very important. The more volatile the market, probably the more swing up and down that you're going to have to endure. At the same time, don't have this very small target and a very large stop. Make it proportionate. 1 to 1, 2 to 1, it's within reason. But anything more than that, you have to consider whether or not the trade should be taken at all. So this is a long trade. You're in, you're out, you're finished. This trade took roughly, I would say, 5 minutes at the max, and you're done. Now, the follow-up trade is a short. And so as soon as I saw this trade here on the chart, I said to myself, I want to enter at this price. I'm not going to rush it. I'm not going to chase it. And I'm definitely not going to get a bad fill. I want to have a 33.20.50. I'm sorry, a
Order submitted.
33.20.50 or better. So here is market of touch, 33.20.50.
Order filled.
Now, market of touch, remember you can lose a tick on the trade. So that's exactly what happened here. There's a tick of slippage. And I automatically have a 4-tick target, and I have, I believe it's a 6-tick stop here, automatically placed for me. So what I'm looking at is in relationship to what I'm trying to achieve, what I'm trying to accomplish. I want to have a 4-tick target made fairly quickly, and I want to be out of this trade. I don't want to hold on to it forever. as 4 ticks in 1 point should be immediately made. If you're holding on to trades again for hours on end, or even if it's for an hour, it's too long. A 4 tick target has to be made fairly quickly. Now, if you get stopped out, please don't move your stops. Keep your stop where it is. It happens. You have to take the stop and then you have to recover. So you see this trade here is going against me. This trade is not going in my favor. I'm losing money at this point. If my target, I should say if my stop was tight, very, very tight, I would get stopped out of this trade unnecessarily because of this random movement up and down. And if my stop is tighter than what you're seeing here, expect to get stopped out. If your stop is too large, which I'm trying to avoid, it's the same problem. You don't want to get stopped out at this huge loss. So it has to be in proportion. The win and the risk to reward ratio has to be proportionate. So in this case, the target was hit,
filled.
the 4 tick target made. Use an MIT order, market if touched. Again, I'm not waiting hours on end for this to occur. This trade probably took less than 5 minutes to happen. And you're finished. You're done. You're looking for the next opportunity. Again, don't overtrade. I tell everyone, even though you may have 2 or 3 or 4 or 6 or 7, 8 trades in a row, you have to expect at some point that you're going to have a stop. So trade less, trade better, trade with confidence. If you have any questions, please email me at DayTradeToWin.com. All the information about mentorship, Atlas Line, the Trade Scalper, the at the open method, and much, much more that we focus on and approaching the markets with price action. Until the next video, my name is John Paul. I'll see you guys soon.